So, we on? All right. Right. So, let's do this, guys. Let's pick up where we left off. On page 120, we're talking about referrals and the fact that you've got to be careful about referrals. And let's face another reality that virtually everyone in this room who's in private practice will have a networking system, right? Where you're going to network with attorneys, clients, appraisers. You're going to have your system of hopefully people you send business to, and fingers crossed they send business to you, right? Everyone agree that this is how the world operates. But you got to be careful because as you read the Illinois State Bar Association opinion, and this goes for accountants as well, that these referral that you make really should be done in a way that is unbiased and not exclusive. The word exclusive is a bad word. But if you exclusively refer someone to particular attorneys or particular banks or whatever, that's not good because the exclusivity means that they're probably doing the same, but you're not giving your client, you're supposed to give them representation where they get the best, and you're just doing it to promote your own interests, right, at their expense. And one of the singular worst things you can do, at least in my experience, is have some sort of a referral arrangement in which you get a fee, in which you do not disclose it to your client. If you get a fee and you do not disclose it to your client, you are asking for big trouble, if there's any trouble, because clients, I hope many, fingers crossed, will be forgiving if you make a mistake, okay, hopefully. But they will not be forgiving if they find out that under the table you're making a fee at their expense. That's been my experience in the tax shelter industry in the cases I've worked in. Many of the clients were quote unquote friends with these accountants, and they sort of knew maybe they knew what they were getting into with the tax shelter or whatnot. But what they didn't know is, unbeknownst to them, that a fee was being paid under the table. And that's what really gets their dander up. So, as you read through this, you can have these reciprocal relationships. They should not be on an exclusive basis. In some states, you got to check. Not to my knowledge, in New Jersey, unlike in Oregon, on page 123, if you look towards the bottom of page 123, it says, an Oregon ethics opinion includes the type of referral arrangement described in the Illinois opinion is per se unethical, and it cross-references it. Okay, so just have to be careful and make sure that whatever your arrangement is, that nothing in, again, avoid the word exclusive. So let's look at problem 3-16. You're asked to do estate planning, and will drafting for Beth, the majority shareholder and CEO of Widgets, a regular firm client, and Beth's wife, Mary. So it's a gay couple. We got Beth, we got Mary. What was you initially advised Beth and Mary before agreeing to their estate plan? Anything you have to tell Beth and Mary before you do their estate planning?
Signing informed consent.
Say again?
Signing informed consent.
Inform that you're going to represent both of them, and they may have a conflict of interest, right? I do this typically now in my retainer letter, even with first married couples. It just says that couples, by their very nature, may have a conflict of interest, right? So, Peter's spot on. So I get a conflict, a dual representation letter. Assume that after having heard their initial advice, Beth and Mary still prefer to have you handle all their estate planning. They provide you with the appropriate informed consent. What would that be? And what are the authors alluding to? What would that be? Informed consent?
We,
A waiver in writing. I mean, you cannot, you don't want to get, well, say again?
you don't wanna go with verbal.
Verbal will not cut it. Verbal will not cut it. You do the planning and drafting, and you draft the will for Beth and Mary, which Beth and Mary execute. You notice that Widgets does not have a buy-sell agreement with Fred, the chief financial officer of Widgets, was also the minority shareholder. What you do now, do you need a buy-sell agreement? Should you have a buy-sell agreement? And the answer is, so hear me, very common mantra on my part, that all closely held businesses should have a shareholders agreement, right? All right, so you should. I mean, that's just good planning is recommend that you, there's nothing flawed about that. But then we get to problem D. The buy-sell agreement is drafted to provide that in the occurrence of a certain events, death, divorce, or bankruptcy of the shareholder, the company will buy back the shareholder shares in the company with a valuation determined on a formula basis. So it's what we call a redemption agreement. When the agreement is ready, Beth offers to set up a meeting for the two of you and Fred in order to get the agreement signed. At the meeting, you ask how Widgets will fund the share repurchase, particularly in the case of Beth's death. Beth says, quote unquote, "Don't worry, won't be a problem." Fred is concerned, but doesn't pursue the issue. Are you ready to let Beth and Fred sign the agreement? And what equivocation might you have in these circumstances? Andrew, what might you have, if any?
I think I'm a little confused. Isn't the point that the funds will come from the policy on her life and then he'll buy the shares? What's the question here? I mean, I know he says, don't worry, it won't be a problem, but it's just,
I think it's the dollar amount.
is it the dollar amount?
It's questionable, right?
I don't know what the,
They're saying
where do
that-
you see the insurance? Did I miss something in the problem?
Oh, I thought that was what was going on here.
I don't see any insurance. Dick, do you have an angle to this?
I don't think it's with insurance, I think it's where the funds are coming from. And they haven't hammered that out.
Right, what do you
Okay,
think?
I'm sorry, I was.
All right, what might be your concern in this context? Like,
Well, when somebody says, don't worry, you should need the word, that's a big red flag.
but you as the practitioner, what's your concern here?
I mean, there could be future malpractice.
Who?
Fred, or whoever is gonna have.
Why Fred?
Yeah.
Is Fred the client here? Remember, generally your clients cannot sue you. Excuse me, let me rephrase. Your non-clients cannot sue you. In other words, your clients can sue you, right? But your non-clients should not be able to sue you. So what exposure do you have here? Kevin, any exposure here?
Well, I would be careful because since Beth and the company of Fred are making or trying to make some sort of agreement, but they don't want to sign, I believe that's the problem.
I'm sorry. What's your exposure here?
That since everything is kind of hazy, saying don't worry.
This isn't hazy, by the way. I don't mind it. When I say hazy, these kind of things happen. This is a real, I like this textbook because this kind of scenario we could really see unfold. John, do you have an idea of any concerns here? What's your biggest risk here? Brian, you were gonna say something? Any risk, or you close the book, no risk?
I mean, it's a strategy you're recommending. I mean, if Fred doesn't end up coming up with the money, then the buy-sell agreement's failed, right?
Well, the thing is, when you draft a buy-sell agreement, Fred may, look, people are not professionals. Fred's in the business, I don't know, what kind of business is this? Making widgets. Fred thinks you're the attorney, may think you're the attorney for the company. And it's a misperception, but the jury doesn't get it. And Fred may be under the misimpression that you're representing all of them, right? That's not uncommon for people to think you not only have Beth's interest at heart, but you have Fred's interest at heart, right? Why? Because you put together this whole agreement and you're asking Fred to sign it, right? So what should you do? I mean, the notion here is you should make clear to Fred that, I want to make clear in writing that you don't represent Fred. And Fred, you should have independent legal counsel review this. Signing this may be, where you end up putting your house in bankruptcy, right? And if Fred doesn't have something in writing from you that you don't represent Fred, he can extrapolate the fact that you put together an agreement for the company that you wanted him to sign, that you represent him. Is he right? Remember, he doesn't have to be right. He has to be, how do we say it, have a colorable enough a case that a plaintiff's lawyer is willing to sue you.
Diligent.
Say again?
Diligent.
You should be diligent, but again, get it in writing. The buy-sell agreement is signed as you sit at your son's soccer game. 2 years later, you hear from another parent who works for Wizards that Beth has been having an affair with Wizards sale manager Melody. So the plot thickens, right? For months. What should you do? So your client is having an affair, and do you have, Ming, any responsibilities here?
Maybe has a potential problem.
Who does? There's a lot of people.
Well, it could be hearsay, right?
So what do you do?
Nothing. Keep your mouth shut as if you didn't hear it.
Enjoy the game?
Yeah?
I would
Just let him
confirm or just make sure with my client if that's true or not. That's what I would do.
Who's your client here, though?
And then?
Beth, no?
Isn't Beth and Mary both? Can you do Beth and Mary's estate plan?
Yeah, so
Yes.
it's none of your business. You don't do anything.
But do you represent the company?
Yes.
Yeah.
And generally, if you're general counsel for the company, shouldn't you be saying that there are certain labor laws that you may be violating
Harassment.
by having an affair with the sales manager? That may be an employment issue, right? Now, shouldn't you be talking to your client and saying, gee, I don't know if this is true or not, but remember that there are certain employment issues that you're not supposed to be having relationships with someone in the office. Now, wouldn't that be the responsible thing to do? Now, here's the question that if you do that, what obligation, if any, do you have to your client Mary to make disclosure? She's shaking her head.
Stay out of it. You can rack up the bills when things go to hell.
Well, if things go to hell, you've got to get the hell out of it yourself. The bills are over.
It's just hard because you have a duty to both of them, and it's like, but
That's why, by the way, many firms, law firms, for example, do not allow their corporate clients, they do not do their estate planning because they're fearful if something goes wrong, they're going to lose the big corporate account. And why potentially lose it over a $3,000 estate plan? Like, why jeopardize it? So many firms will only do the corporate work, they will not do both. So here, you probably want to talk to your client, see what the truth is about whether or not she is having an affair. If she is having an affair, point out that whatever the employment laws are and what the responsibilities would be, maybe Melody has to leave the company if you're, and then raise the rhetorical question, your moral obligations to Mary. And having said that, the real challenge, and it's presented, I think, in the next problem, is do you have an ethical obligation to make disclosure to Mary? He keeps shaking her head vigorously, not.
Shut up.
Technically not,
The
but
person should have shut up.
morally, it's a battle because technically one client has one issue that doesn't have to do with the other, so it's
Yeah,
like.
tell the one client you're undermining the other client.
Yes.
You know,
I just think that, because in the beginning, he starts out as drafting the will, right? And second, he does the buy-sell agreement, so those are two separate transactions. I don't think that the affair, in my opinion, has anything to do with those transactions. If she's having an affair, fine, I mean, so unless like, it has to do with, possibly Beth paying her lover more money, and it has to do, a business issue, then maybe, but I don't see
I mean,
why.
the authors are just trying to make a sexy problem here of sorts, but it could be an issue, all right?
Beth should get proof that it's consensual.
What's consensual?
The affair. So that Beth doesn't get sued later for
Yeah.
harassment or for using her power
Oh, so you mean that consensual between
between
Beth
her
and Melody?
and Melody.
No, the next question is
Listen,
gonna be,
Doctor.
what should he do if Beth became a divorce?
Well, look,
If they're married.
Mary calls you later and notes that she and Beth are getting a divorce and asks you to draft a new will for her. Can you do this? Can your firm continue to represent widgets? Well, can't, we've had this conversation before. Can you draft a will? I think, John, someone said, well, now that they're divorced, they really don't have a conflicting interest. You still, in an abundance of caution, may want to get a consent because presumably Mary's not going to leave anything to Beth, and that I don't know what kind of perception that's going to have. So, can you do this? Probably, but I would look to get informed consent. Can your firm continue to represent widgets? And that could be really problematic. Particularly if they're going through a divorce and each one's going to seek an ownership interest in the company. Is that going to put you in a position where you're going to have to pick sides in a way that it's against your prior or existing client? So, again, not to make your notes equivocal, I wish I could be more black and white, but these are not where you have black and white answers, right, guys? 3-17. Lawyers represented husband and wife for many years in a range of personal matters, including estate planning. Husband and wife have substantial individual assets, they have substantial joint assets. Recently, lawyer prepared updated husband and wife wills for husband and wife. Like their previous wills, the wills primarily benefit the surviving spouse for his or her life, with beneficial disposition at death, the survivor being made equally to their children, none of whom were from a prior marriage. Husband, wife, and lawyer have always shared all relevant asset and financial information. Consistent with the previous practice, lawyer met husband and wife together to confer regarding changes to be made to updating their wills. Several months later, after the execution of the new wills, husband confers separately with lawyer. Husband reveals to lawyer that he just executed a codicil prepared by another law firm and made substantial beneficial disposition to a woman with whom husband has having an extramarital affair, or relationship. Husband tells lawyer that wife does not know about the relationship or the new codicil. Gee, that's going to be a great moment upon the husband's demise, right? As to which the husband asked the lawyer to advise him regarding the wife's right of election in the event she were to survive the husband. Keep in mind, right, that a surviving spouse has what right?
All rights.
Hmm?
I mean,
If your spouse dies and your husband leaves it all to the girlfriend,
it's in conflict with the will, right? Which document
No. Your husband leaves his entire estate to a girlfriend. Do you have any rights against your husband's will?
Yeah.
There-
It depends.
Yeah,
Depend
one
on
third,
the-
right?
1/3.
The state you are looking.
Doesn't depend. You have an elective share rate.
Doesn't it depend on the state you're in though?
It does. But in New Jersey, it's 1/3.
Is that materially different in New York, or is that?
I think it's the same. The only difference in New Jersey is you back out the assets of the what the surviving spouse owns. New York, you don't.
Like a pro rata 1/3, or can they decide like what?
It's 1/3 the value. What are lawyers' ethical obligations? Okay. So in that scenario, before we keep reading, does the lawyer have any ethical obligations if the husband comes to ask about the elective share? Omari, what do you think?
Does a lawyer have any obligation?
Yeah.
Tell the wife.
Yes. Yes, disclose.
Tell the wife?
Same
Pitch,
thing.
if you will.
Can't tell the wife.
Say again, Peg?
You can't tell the wife, you have to advise the husband to tell the wife. So it's
And
kind
do you
of-
think the husband's gonna tell the wife?
Yeah, no. But kind of, you are not, you're obligated to.
Well, why are you conflicted?
Because the
Because you-
will that you drafted may be worth nothing.
Well, let's articulate this.
I just have a problem because he went to another lawyer to do to change or to add or amend. It says the codicil. So that's where I see the problem because that's not the will that the guy technically started out with. But he went somewhere else to have this thing added. So that's where I see the conflict. Like,
What's the conflict?
that he
Be
didn't.
careful
do,
about that word conflict.
that he didn't do the change. So therefore, I don't think that he has any obligation to tell the spouse. Because,
But now the husband's coming asking for legal advice.
You can't reasonably advise one now without
Yeah.
telling them what
I
the
think
situation
But
is.
just articulate.
He's trying to figure out how to get away with it.
Well, here's the tension. Let's just put words to it. There's a duty of confidentiality, right, with the husband, right? Because the husband is telling him this with the expectation of confidentiality. Everyone agree? Husband says, look, I got a secret. Close the door. I've been having this great affair, but my wife doesn't know about it, right? And I've done this codicil. Wife doesn't know about it. So what do you think? So that's the duty of confidentiality. And what's the other duty the husband has? He has a duty of loyalty to his clients, namely the wife, right?
Right.
Have you actually had that happen?
Oh, I've had people come to my office. The wife came with her daughter. She wanted to change her will. I had done the husband's wife will. And we sat down and she was going to make the change. I don't know what motivated her not to leave it to her husband. I said to her, we never had this meeting. I can't do this. She said, why can't you do this? I said, can you imagine the day you die, if I do this for you and your husband sees this, how would you feel the day your husband died if he came to me and we changed it and disinherited you? I know that sounds stupid. Of course anyone could go through that mental exercise. And all of a sudden I saw the light bulb go on. She said, okay, I understand. And she left. And truth be told me, never told the husband. And
And they're happily married.
I don't know. I don't know. There's some things like
Politely
lose my number.
volunteer to establish a very discreet trust for them to push off some assets.
I ain't going there. But people will do it, and you gotta be nimble. I didn't bill my time. I just like lose that number. I can't even. I challenge unless someone hypnotized me. I don't even remember who it was. This happened like 2 years ago. Subconsciously, I wanted to forget it because.
And you can't be hypnotized. As you
Yeah, I
proved.
tried that. Didn't work. So anyway, guys, these things happen. In your career, you're going to have things like this where you're going to have two ethical duties, right? one of confident, I mean, there's all sorts of ethical duties you have, and they don't always dovetail. And when they don't, and here's a perfect example, you have to priorities. Which one is the higher ethical duty?
Confidentiality.
Probably. The other thing is, I hate to say it, there's, how do we say, your self-protection instinct. Because suppose you did tell the husband, I would worry about my personal safety, wouldn't you?
Yeah.
I mean, seriously,
Angry
people.
spouses go to very extreme places sometimes.
Well, he's, right, very extreme.
But if she finds out that you knew, I would be worried about my safety too.
I would, depending, but I'd be more worried, maybe it's the male instinct. Us men are kind of crazier than the women. I mean, I think most violent crimes are committed by
Yes.
men.
I don't know,
Men
crimes of
against the
passion are
woman.
a pretty equal split.
Yeah, but that's usually
No.
by the woman against the spouse,
Yeah,
not
it's
against.
usually, yeah, it's not wrong.
I did, 3 or 4 years ago, have a client whose husband was having an affair, and he had his girlfriend try to have my client, the wife, literally taken out. And he's serving time now for attempted murder. So, I mean, people do all sorts of things. All right, so suppose the lawyer tells husband that lawyer cannot advise him regarding wife's right, and the lawyer is withdrawing from the representation of both husband and wife. What are lawyers' obligations with respect to informing or not informing wife of the substance of the husband's revelation if husband does not do so himself, which he's not, all right? And the Florida opinion is, that the authors cite here, says you have a duty of confidentiality prevails over the duty to disclose. I'll repeat that your duty of confidentiality prevails over your duty to
So
disclose.
couldn't we say that something came to my attention and I realized that I cannot represent both of you anymore?
I'm sorry, your confidence, can you say that?
I mean, can you, like, he could tell the wife without revealing what the husband told him, that
I mean, this
some
gets
new things
into,
have come to light, I cannot tell
I
you
have
what
too
it
many
is.
clients, I mean, you gotta make up an excuse,
Yeah.
but you gotta withdraw. And Andrew, to your point, hopefully the wife will not perceive that as you know it all along.
Yeah.
Usually with an affair, it's not a question is does the spouse find out, it's a question of when the spouse finds out. So,
What if she just kind of asked you vaguely, do you know of anything else that he has done?
well, again, under the duty of confidentiality, you'd say, I really don't. I mean, you guys,
Confidential.
every one of these situations is unique. I'll say, how big is the husband? Does he have a gun license? Problem 3-18. Your law firm regularly engages an appraisal firm to prepare appraisal reports for use in family limited partnership transactions and as litigation support for valuation issues. The appraisal firm did a valuation of corporate stock that was an integral part of a tax shelter. Can you represent an investor in a tax shelter in connection with an IRS audit or tax court litigation? And I guess, Ming, I would bring this back to you because let's just see if you think this could work. And then, Ming, see if you agree. Any problem here, any conflict of interest?
Maybe no conflict.
No conflict, Dave? No, Mike, John? And the answer is correct. I just want to get you guys in the habit of saying no conflict, because, again, you could get in the habit of saying everything's a conflict, and
When in doubt,
when
conflict.
in doubt, but this is no conflict, right? Because the appraisal firm is not your client, right? So it's not like you have conflicts between two different clients. You use them, they're a vendor, right? So you don't have to worry about having a client conflict because they're simply a vendor. Maybe they screwed up. If they did, you may have to sue them. But the fact you use them doesn't mean you can't sue them. Like, suppose you use Staples for your office supplies, right? And then one of your clients slips and falls in front of Staples. And you want to bring a tort action, right? The fact that you use Staples, right, for your paper supplies doesn't mean, gee, I can't, I'll be biased. They always give me such good paper delivered, right?
Does it mean you can't continue to use Staples as your client while it's ongoing?
You could. I mean, they're a vendor, they're not a client.
Right.
They,
Just a reminder to check in on the keys, to find the owner of those keys.
the keys was Janet.
Oh, okay,
She was so thankful.
okay, awesome.
So Janet had left her keys here, and I was walking around with them. So fortunately, we put that issue to bed. Now, page 125, there's a discussion about conflicts between lawyers and clients. And I had mentioned to you that when in doubt, here I can tell you categorically, when in doubt, try to avoid having transactions with your client. And if you do what's imperative that you secure, if you have transactions with your clients,
Waiver and disclosure.
waiver and disclosure, right,
And
Omari?
it's an arm's length.
It's gotta be arm's length, but what is arm's length, be? And that's gonna be the question.
Well, as if it was a third party, as if it wasn't
So
someone you already knew.
you should, in my ideal world, if you're having a transaction with the client, instruct the client to have another attorney or another accountant represent them so that they get unbiased, undistilled views. Because if you have a transaction with a client and they think subsequently, gee, I think I told you this, that one of my friends had a transaction with a client, helped them with a bankruptcy, and they couldn't pay my friend, so he said, give me, as payment, title to half your gym. And it seemed fair, disinterested, but subsequently they argued that they got ripped off, that the gym was worth a lot more than, or half the gym was worth a lot more than his fees, and turned it into a nightmare for my friend. He thought he was doing them a favor, instead of getting, and by the way, you guys may have read, so I think it's kind of a fun story, that Facebook in California needed to have their offices painted. Do you guys hear this? And so someone said, look, we'll paint your offices. You could Google this and just give us, this part is me making up, I just don't remember with specificity. Give me 100 shares and I'll paint your office. This is what Facebook was at its very, and they agreed, and then Facebook became those 100 shares like $10 million. So for painting the office. But as a professional, obviously our obligations go much deeper than a painter. A painter doesn't have the same ethical bounds we have. All right, problem 3-19. Lawyer has a number of estate planning clients who could benefit from financial planning advice. She's considering establishing a relationship with a financial planner who would pay her a referral fee for each client she refers to. Can the lawyer accept the referral fee? Let's stop there. Can you accept a referral fee?
I think you can, but it has to be disclosed, and you have to disclose it to both the client and the,
Right, I mean,
and the.
you really have to, there's no issue here. You must get full disclosure and consent.
It's non-cash compensation, it's, something like that, kind of gift card situation where they.
I'm not gonna worry about the gift card.
Oh,
but
oh, no, I'm saying if it becomes a greater than non-de minimis amount.
Right. Let me just ask, how many of your accounting firms, some people in this room, have financial planning firms associated with your accounting firm? Like upstairs is the accounting firm, downstairs is the financial planning firm. John, tell us, if you don't mind, tell us what you have going on and how you avoid conflicts in that context.
Well, our firm kind of does both. It's not really like
Right.
two separate firms. It's
Okay, do you have two different letterheads?
yeah.
So tell us, when a client comes in, how do you orchestrate that with the client?
Well, if they're coming in for tax advice, it'll be on the accounting firm letterhead. If there's investment advice, it's
Right, but they come in presumably, hey, I wanna do my return, John,
yeah.
and you say, Solid, we'll charge you $1,000, here's, we'll do your return. Oh, you made a lot of money this year, I don't know how you haven't invested, right, John, this is you speaking.
Mhm.
You may wanna consider, we have an investment firm as well, where, what do? Help them invest and diversify and things like that?
Yeah.
And is it a fee for, how do you arrange your fees in that context?
I think it's a separate fee. I think I don't really work on the investment side.
But there is a whole investment side.
Yeah.
And then they might start getting correspondence from your investment firm, right?
Correct.
From different letterhead.
Potentially, yes.
Right. So, John fits the bill of potential conflict of interest. Now, how does your firm handle that if I decide to use your firm's services? The financial, is there a protocol in your firm or not?
I'm not sure.
What do you guys think? Is that viable, not viable? What should be done in that context? And John's firm is not alone. There's a lot of firms that have this dual existence.
Another disclosure?
I really do think you have to have disclosure and keep, make sure everyone knows what's going on between the firms. And the biggest
Actually,
risk.
well, like when we before we prepare anyone's return, we make them sign first an engagement letter, and then also I think there's IRS like disclosure forms, like letting them know that they are.
But there's a difference between those kind and then saying use your investment firm, right?
Mm.
So I mean,
And if you have
remember,
some-
it's an exclusive relationship too. So you gotta be careful about, because does your accounting firm recommend other financial planning firms? I would doubt it.
Generally,
Right.
no.
I feel
So-
like that's something that's kind of covered in like a blanket statement in an onboarding process where.
Be careful about these blanket statements. Like, when you guys go to a parking lot, and they say, here's a damage waiver, and it's like 3 pages, single space, do you guys read any of it? And the answer is no, right? Are those enforceable by the garage?
Sometimes.
No, that's called an adhesion contract, where no one has an expectation that you're really paying attention, right? So most courts do not enforce those adhesion contracts. But by the same token, be careful about these forms that you have clients submit that on an intake, and they're not really paying attention. Because if a jury looks at that and says, we would never look at that clause, I think you really wanna put it in their face, all bold, separate, apart, and make sure that everyone's clear about the relationship and everything else.
So the fine print isn't enforceable?
Generally not. Think about fine print. Who reads it?
No one reads it.
The way it thinks.
But it gives people pause and it causes people to settle, because lawyers will always couch and say, well, there's but at the end of the day, generally adhesion contracts have real problems of enforceability. And rightfully so. If you're on a jury, we all have been on the other side. If you're on a jury, you know you don't read those either. Should a person put themselves at risk just because they signed an adhesion contract?
All those Apple and Microsoft and whatnot agreements, they're not enforceable?
They're hard to enforce, let me put it that way. It really depends on the person and their knowledge base and things like that. The point I'm making with John and others in this room is that when it comes to important issues, don't bury it in a multi-page engagement contract, right? If it's important, when I have a conflict interest with a spouse, it's in my retainer. I have generic language that says that there may be a conflict of interest. But if I see a real conflict, like a second marriage, and they each have separate, I get a separate standalone document entitled Due Representation Letter that I had them sign very early on. Because I know that if things, push comes to shove, I want to make sure there's no ambiguity, that they knew what they were getting themselves into. Not that they just signed off on something that they had no clue about. So John, just talk to the folks that I would be very careful about that.
Okay.
I'm not saying it can't be done, shouldn't be done, but you should make it very clear to your clients. And go on the internet and see what other firms are doing,
Okay.
This firm is in New York though, right?
wherever it's located. John, is your firm in New York?
Yeah.
Same thing. I mean, there could be slightly some variations in the rules, but I'd still say you gotta be careful.
But, I mean, I'll bring it up because earlier I said record your clients, and the reason why I said that is because I used to work for a commodities firm with investments, and that's what we did, we recorded all of our clients, but it was in the state of New York.
You did what with your client? Recorded them?
Yeah, as far as when they're going through disclosures and signing up for a new account.
Everything.
On the investment side, we recorded everything, especially when we executed a trade and the futures market for them, we would record them, absolutely.
Right, I mean,
And that was like
in the
was a way to
investment
help
world,
us
that's
out.
more common, but,
Yeah,
you know, I don't know how that works in the accounting and legal world.
me neither, I'm on the finance side, that's why I was asking, that was a normal practice for us.
Because, correct me if I'm wrong, having been on the other side of those calls, the first thing it says is, this call may be recorded,
Right.
right?
No, we would tell them that we're recording at this moment and then we would
Right.
go through the paperwork and then,
But have you ever had a lawyer or accountant say, do you mind, I'm about to record you? Never.
That would be in the
I don't wanna talk
Form
to the
ADV,
lawyer.
right? Yeah, you'd have to give all clients anyway. So, right, you have Form ADVs,
Right.
big documents that you gave to all of them.
Yes.
That probably said that you're recording them.
yes.
The
They
Form
said it in the
ADVs don't
paperwork, but
fall
then
under
we-
that. Nobody reads those things.
Yeah.
Yeah, we say it again on the phone because most of the work
Okay.
is on the phone.
Yeah.
All right. So, in response to this question, you really need, for it not to be exclusive, client has to be informed, and it should not be of indefinite duration. 3 different criteria. Cannot be exclusive, client must be informed, and it should not be of indefinite duration. Problem 3-20, lawyers provided tax and other legal advice to a limited liability company in a traditional fee-for-service relationship. LLC's business has grown over time. Members believe that it should have general counsel. They've asked lawyers to take on this responsibility on a part-time basis. In lieu of fees for this work, LLC members have proposed to give lawyer a 20% ownership interest in the LLC and a percentage of the company's profits, if any. If the lawyer accepts this position, she would continue her private practice representing other clients. Under what circumstances is the lawyer ethically permitted to enter into this proposed arrangement? Does this pass muster? And then this could be an accountant too. I mean, the terms here are interchangeable.
The ownership interest is probably okay, but because of just the nature of the profit sharing now, that could cause her to have a conflict of interest in some of the decisions she's making for the company.
How about get it? The ownership interest is or is not problematic on its face, John?
I think it should be.
But don't you run the risk, like my friend, that in retrospect, someone says, gee, you were looking, I'm just making up, there's gonna be a $3,000 fee, this 20% interest was worth $100,000, so you took advantage of us, we didn't know what we were doing. I mean, are you entering into a transaction with your client? Absolutely. And don't you run the risk that you're gonna say, Well, if you're their lawyer, true lawyer, you might say, well, give the person, I'm making this up, a 12% interest, not 20%, because 12% is the right.
You probably want somebody else to draft the document establishing the procedure, but once
Or
it's
even-
set up, I mean,
Well, that's
their
it.
interests are aligned.
Once it's set up, but before it gets set up, you really have to tell your client, consider getting separate legal counsel. Okay, because I have my own biases. You're gonna bring 2, because the percentage may be wildly off. 2, get informed, if they say, no, we're not gonna get separate legal counsel, get informed consent from them, that they understand that 20% is the number they came up with, you didn't give it to them. They think it's fair, they think it's worth X dollars, and it's commensurate with the amount of work you performed. So, going forward, I'm not sure if there's a conflict of interest, because everyone has a motive to maximize profit. So that to me is not a conflict. Everyone wants, we're on the same page on that one. Just anytime you're dealing with your own client, guys, across the table, your antenna should go up. Danger. Contingent fees, by their nature, it could be problematic. And now, insofar as Circular 230 is concerned, just to repeat what we've already looked at, does Circular 230 permit contingent fees?
It's on there, but it's been challenged.
But
Yeah.
when you say, does it blanket disallow contingent fees?
No.
No, it says when
It tells you how to do
when.
it, it tells you when you can, when you can't. Exactly
Okay,
to what
right,
side.
it bifurcates the world. It says sometimes contingent fees are impermissible. When are they impermissible?
During the initial tax return.
During the initial return, right? There's too much of an incentive for accountants and return preparers to take aggressive return positions if they have an economic state. And there are certain times contingent fees are permissible, right? If the return is under audit, right? Because then you are dealing across the table with the IRS. So Circular 230 creates a world of bifurcation, and the AICPA rules in Appendix J has a similar set of rules. That's spelled out on the page 126, 127. Right, so, everyone see, 126, the last full it's not even a full paragraph. The AICPA prohibits contingent fee arrangements in connection with the preparation of an original or amended return to claim for refund. That's right in Appendix J, but then delineates certain exceptions. But, as you guys were alluding to, does Circular 230 have any application in the year 2019 to return preparation? And the Ridgely decision calls that all into question, right? But that doesn't mean, and the authors make this point, by the way, why they repeat it, I have to say, I think this publisher made a mistake. I don't know why they repeated the Ridgely decision here, right?
Yeah, and loving over them. They use the word.
Was Loving repeated again?
Well, no, not repeated, but they use a lot of the, obviously, background for loving.
Well, that's a different issue. They didn't have to repeat the, I think that was just a mistake on the publisher's part. On page 135, I think it's worthwhile to point out in the textbook, right after the opinion, it says, despite the outcome with respect to the IRS, it's worth considering whether Mr. Ridgely nevertheless may have a problem with state licensing board for the AICPA. It says, according to court filings, he was a CPA in Texas, thus he could be disciplined for violating these rules. I do think there should be a common set of rules applicable to all tax returns.
That makes it seem as if the tax return is not CPA, CPA still has issues with his license.
Right. And lawyers aren't bound, there are no rules for lawyers. Lawyers theoretically could charge contingent fees as well. So only accountants get the short end of the stick here.
So the tax attorney do it under the ABA rule.
Yeah, there's no prohibition under the ABA rules. The textbook makes that clear. Yeah, and that same paragraph on page 135, it points out. So I'm a big subscriber to universal standards. Problem 3-21. Lawyer's been asked by client for advice in connection with client's investment in a series of financial transactions which client hopes will result in substantial tax savings to client. Among the services to be provided by lawyer will issue an opinion letter describing the tax consequences of the investment. A lawyer's fee represents a portion of the projected tax savings. Would a matter if lawyer agreed, perhaps retroactively, to reduce her fee, tax savings did not hold up under audit or litigation? What do you think? Peter, you're gonna say?
I would say that would be a problem if you can't issue fees on what the outcome is going to be.
Why?
Because then I keep being aggressive, because then you control the outcomes.
But what's your, sorry to say this, what's your authority, but not that sorry to say it? Anyone have it?
The ICPA.
But it's a lawyer.
Oh.
Then you can charge continue fees.
Alright.
There shouldn't be any problem.
I thought we were supposed to look at the lawyers if they would count as well.
Well, that's for my verbiage, but not, I mean, they really aren't interchangeable. When it, guys, let me give you some more foreshadow. Who has more latitude in terms of advertising, lawyers or accountants? Who has more latitude to advertise?
Lawyers.
Accountants.
Accountants,
Accountants.
much further out.
We have more restrict.
Lawyers are more restricted. And let me give you an example which you'll see coming up. As accountants, can you cold call and try to get clients? Yes or no? Can you cold call?
Yes,
Maury, yes?
I think so.
Have any of you ever cold called to try to get clients?
What is that?
Like that?
What is that?
Cold call is where you go through a business directory, call up, ask for HR or ask for,
Okay.
and say, look, I'm a great accountant, I charge a lot less, use me. Can you do that? Absolutely. Can a lawyer say, hey, I'm calling you, I heard you got a speeding ticket, I heard you just got injured, I heard,
They mail it.
Well, lawyers can.
Oh,
I
I got a
never
letter
mailed.
We
from
mail
a
it.
If they mail
lawyer.
it, is that the same difference? Because when you
and
get
they
speeding-
call you.
No,
No.
they're ambulance chasing.
Sure. But they get a letter, I got a
What's the
letter.
difference between a call
How
and a
is
This
that
is,
mail?
you got a speeding ticket paying.
No, it's not, it's an accident, and someone hit me, and the lawyer sent me, the police report. And they say, if you want to represent, we can represent for you.
Yeah, or if
Yeah,
you owe the
that's
government
true.
money, you start getting a bunch of letters from attorneys. So I'm trying to figure out what's the difference in communication verbally.
We're
versus
gonna
written.
learn, so everyone, come to
And the
class.
standards for-
We're gonna come to class, we're gonna see chapter 5. All right? So 3-21, should not be a problem. Lawyers often charge on a contingency, and in this case, it's question whether or not, Circular 230 would apply here.
So if you're an attorney CPA, you call regarding CPA services only?
You're gonna hold that question.
Okay.
We're gonna see it come up in our textbook.
Well, we have lawyers who reach out to our clients who don't pay, and they collect for us, and.
Right, but they're not looking for clients, they're looking to sue your.
No,
Bit different.
but then we give them a portion of.
That's absolutely
yeah,
fine.
a percentage of what they
Right.
collect, yeah.
Collection agent, part of.
Well,
collection.
yeah, they're playing the role of a collection agent, kind of, but.
Yeah, absolutely.
But under the legal framework.
Yeah, but that's fine, because there's a difference between attacking people versus trying to get people as clients. Okay, beginning on page 136, there's a generic discussion of tax return accuracy standards, which I'm not so sure how important that is. On page 137, referrals to the Office of Professional Responsibility, they talk about situations where referrals are mandatory. Referrals are mandatory. And situations on page 138 where there may be a referral. May be a referral. And again, in light of the Loving decision and Ridgely decision, the scope of Circular 230 is certainly much more narrow than it was 5 years ago. Problem 3-22. Several years ago, a lawyer gave tax advice to a long-term client with respect to an investment that the client was then considering. The client made the investment. The client's income tax return for the year in which the investment was made is now under audit by the IRS. Because the lawyer is client's regular counsel, the lawyer is representing client in the proceeding. From comments made by the IRS agent during the course of discussions, lawyer has the impression that revenue agent believes that lawyer gave client bad advice at the time of the investment. What, if anything, should lawyer do? What, if anything, must lawyer do?
Inform the malpractice insurance company.
What will most accountants, and here, Peter, you can't use the word accountant and lawyer interchangeably because this could happen to you, right? What would you do if you're the accountant preparing the return and on the audit, the revenue agent says there's been a screw up? What would you do in these circumstances? Right, what might you do?
I'm not sure.
Eva?
He just give advice. If client has to take it or no, that is client's in hand, right?
Well, client,
And if he took it, then.
client took the advice?
Yeah, so it's client's responsibility, not his.
Really? You gave the advice, the client followed your advice?
No, I just give advice. Follow or not follow, it's depend on you, not.
No.
That-
Viva.
Yeah.
I wish life was that easy. I mean, that's
I
like
know
a doctor
life
gives
is-
you a drug and you decide.
Hey, you chose to take
You
it.
chose to take it even though it's the wrong drug.
But that is the job, right? He told that this investment good, this is, I just give you advice. That is not that way.
No.
That's your professional advice. You're charging $400 an hour. They expect results.
Maybe he would have to provide the IRS with the substantial.
Supposed not exist. What do you
So
think
you
you
tell
do
the client that
practically
you messed
speaking?
up.
What was it?
You tell the client that you're ethically bound, right, to tell the client that you
Right.
messed up.
But what do you think you're gonna do? That may be the academic answer.
Or
I'm just
cover-
talking about what you guys would be apt to do because we're human beings.
Cover your ass.
Well, you're gonna try to negotiate with the IRS as favorable as possible, right? Let's just be realistic. You're having a sleepless night, sleepless nights plural. You're periodically waking up in the middle of the night in a cold sweat. Sorry, Pink, to tell you this, but this is the portrayal of what probably is happening, because like, oh my God, how did I screw that up? But your chances are you're going to try to camouflage the damage. But my only observation is I could give you the academic tidy answer. I'm going to tell you the practical answer, but then also say, the more you try to camouflage your mistake, the worse you can make it too. Because the client may subsequently learn, like, you made a mistake, and bring it to an attorney, and when the attorney learns that you try to camouflage it with the IRS agent, now the IRS agent isn't going to be in a conspiracy with you, but you're going to try to negotiate a deal, and then
Unless they are, in which case you put it all on the IRS.
well, but chances are the IRS has no skin in this game, so unless you're really nefarious and you start paying money under the table to the IRS, which you probably don't want to do because that can start getting criminal.
The taxable to the IRS agent?
Oh, that's the least of your issues. Anyway.
This example is on the assumption that he did something wrong.
Yeah, I mean, he's human, or she's human, makes a mistake, and our first inclination is, how do we minimize our damages? And our first inclination is not to run to the client and say, I screwed up, let me contact my malpractice carrier. All right, so V, your point's well taken, so for your notes, it would be, tell them the client made a mistake, I should withdraw from representation, you should hire someone else, and then you'll let my malpractice carrier know how much it is. Chances are you're gonna scurry, but I'm just saying, for your notes or for your mental, you may make matters worse, that's all. Just, guys, in practice, this is gonna happen to you, I'm sorry. And you're gonna have to weigh what direction you're gonna go in. And it's not good choices, so try to choose the less of the bad choice. I mean, it's hard for me to analogize to the Trump administration. I don't know what Donald Trump did or didn't do, but maybe let's assume he didn't do, it's like Richard Nixon. Maybe what they did wasn't great, but it wasn't terrible. But they always say the cover-up was worse than the damage itself, right? So, by the same token, you yourself, as you say, gee, that politician shouldn't have covered up, they should have just said it, moved on, and life would have been okay. Remember, when you look in the mirror, that could be you one day. And remember your own advice. 3-23, lawyer represents client during what lawyer originally thought was a routine audit. During the course of the proceeding, lawyer realizes that revenue agent may have grounds for referring her to the OPR. Is there automatically a conflict of interest? How should lawyer decide whether or not to withdraw from representation? So all of a sudden, the lawyer, not just the client, the lawyer may have some exposure. And what is the author's point here? What is the problem?
Penalties that he may have to pay.
But yeah, sure, you have a 6694, but what other issue do you have here beyond that?
It's the same issue as the previous one, right? There's
But
potentially.
you're already
Right, I mean, don't you have a potential conflict with your own client, right? Because all of a sudden, whose interest are you looking out for? Your own personal interest or your client's interest? And if it's your own interest, you might say, gee, to the IRS to try to project accommodation. Let's just settle this. And I know you wanted $100,000, but maybe I'll have my client pay $120,000 or something. You don't fight as hard because the perception of you fighting as hard is you're projecting, you're recalcitrant, you're a real jerk, you're whatever. But if you all of a sudden throw your client under the bus, your notion is maybe the IRS agent will look at you more favorably, won't refer to the OPR because you just made that person's life easier, right? They got to close a case. So don't you see there's a natural tension between your interest and the client's interest? Again, you're going to do a dance of sorts. Since I said the word dance, my brain has to go there. what was the name of the person, the video? My kid said to me, someone sent me this video,
Oh,
and
the one,
yeah, my kids said, one of my friends sent me this video of this gymnast.
yeah, her name was Caitlin Ohashi.
How do you Caitlin is spelled
K-A-T-E-L-Y-N. L-Y-N.
O-I-N.
Ohashi, O-H-A-S-H-I.
How many of you, by a show of hands, have seen this video? Nate? Mike? I'm saying. Mike, V. Anyone else? If you have not seen this video, I think it's one of the best videos. It's 2 minutes. 2 minutes. Now, Mike, how did you know about it?
Facebook.
Facebook. My daughter said, "Oh, Dad, everyone's seen that. It's on Twitter." I mean, I can't imagine how many different videos. Anyway,
It's got 14 million views or something.
it is incredible what this woman can do. This gymnast, who my daughter then informed me as a backstory. Apparently, she was going to go to the Olympics, but she said, "Yeah, you know what?" Again, this is my daughter. I didn't get. She said that she decided to put her education over the Olympics, so she just went to UCLA instead. Anyway, if you guys want a treat this afternoon, if you're caught in a snowstorm, check out this 2-minute video. It is, I think, one of the most incredible gymnast performances. And 2 things you should notice. First of all, she's just absorbed in smiles, but almost as incredible as she is, if you, her teammates are sort of mirroring what she's doing in the background, and the synergy between her and her teammates. It's just like, this is incredible. All right, so if you guys want a treat this afternoon, definitely Google it, and you're in for a real treat. So, how does my brain operate? We said the word dance. I was talking about the dance that clients do with their attorneys or accountants. And that's a really, how's my French? Pas de trois? Is that the right pronunciation?
Sounds very good.
Do you know what a pas de trois is? He knows. But
The trois means 3, like.
I think it means a 2-step, but does it mean 3-step? Look it up. It's a very
means
common
2,
English
trois is
word.
3.
I've used it in papers before, pas de trois. You got to do this delicate dance. And in this particular fact pattern, what's the answer, the academic tidy answer? Tell your client, tell them that the IRS may come after you, get their informed consent. That's the right answer. But, dot, dot, dot. So for exam purposes, it would be inform the client and get informed consent.
Pont is bridge.
What was that?
P-O-N-T, de trois.
PAS.
PAS.
P-A-S.
Oh, P-A-O, pa.
This is a dance between 3 people.
Is it, I think it's a dance not between 3 people.
Yeah, it is between, trois is 3, so. and
Pas de
it's- and it
trois
says
is
that.
dance with 3 people.
It's a French ballet between 3 people.
Yeah, that's what Miriam says.
I had to,
Yeah.
and how is it used in a sentence?
It's a noun. Today the most celebrated pas de trois in the classical ballet repertory, I don't even say that right, are derived from the works of the great choreographer Marius Atipa.
All right, I gotta rethink next time I use that, how I do it. All right, whistleblower claims. Whistleblower claims. There's a code section which Bob Stern alluded to, which has been made more robust. Code section 7623. That allows monetary awards up to 30%, which is, in the case of Bradley Birkenwald, was, you guys remember that number?
Oh,
That's
Where
new.
does
4 million.
100 and something
4 million.
He got 104 million.
Okay.
All right, so it could be, that's the largest award under this statute. The problem with some of these whistleblower awards is that the IRS doesn't just write out checks. Okay, so you can't just say, I'm stepping down today, I'm gonna give you some information, just cut me a check, make it payable to my, Smith Barney account or whatever. It takes years, okay? And you have to have really compelling evidence, okay? So this is not something you just take for granted it's gonna happen. Now, in your role as an attorney or accountant, you can imagine, you're gonna come across information, right, that could be really, really damaging to your client, right? And could be very, very, had the IRS known about it, very, very enriching to your client, right? So, think about people at different stages of their career. As an accountant, suppose you hate the profession, and you're like, I don't want to be a CPA anymore, or I'm tired of this grind, I want to go into cooking, or I'm going to retire soon. We could paint the parade of horribles you find with the profession, and we could also see that you might be with a client and say, I could leave the profession because I'm going to be strict with my license. On the other hand, I'm going to get this whistleblower award. Maybe it won't be the largest one ever awarded, not 104 million. I'll get 10 times less, I'll get 10 million.
Mexico sounds pretty good at that time.
I don't even have to go to Mexico.
You can't blow the whistle on your own clients.
Well, what's to stop you? You'll have your license taken away, but you wanted to cook vegan food anyway.
Wouldn't it be like
You,
admissible evidence?
Your clients could sue you for that breach of confidentiality, right?
Wouldn't that kind of be fruit of the
There are
poisonous
some other
plants?
things that you can abide from that
Yeah, but you're still.
comes within the lecture later on.
Yeah, it's a tough thing.
Well, talk to me, Kevin.
What do you?
Well, I don't remember in detail, but there are some exceptions to that of breaching confidentiality under whistleblowing.
Well, in this case, if you guys look on page 140, this is in New York County Lawyers Association formal opinion 746, talks about, now this is dealing with Wall Street. This is not with respect to the whistleblower under the Internal Revenue Code, okay? But, right, Peter, you'll agree, conceptually it's very similar, right? The same sort of concept. If you make disclosure regarding securities violations, you're entitled to certain monetary awards. So the parallel is there, right?
But that's a different relationship. That's an employee-employer relationship versus like an attorney-client or an accountant-client.
Well, here it's talking in this case about a lawyer, not a client.
Oh, the attorney blew the whistle on his own client?
Yeah, Rule 205.
Okay, what is the upshot of this opinion, whether it be Kevin, Peter, V? When you read this opinion, what's the takeaway? Can you secure the award? Because obviously you violate client confidentiality, you risk losing your CPA license, you risk losing your legal license. But again, you may have one foot out the door, you may not care, right? Because $10 million looks pretty inviting, you say, gee, I'm not gonna make that $10 million for the next 20 years of practice. I can make it in one day, so why not disclose? Temptation lurks.
So it's not just breach of confidentiality. I haven't read it because I was studying for the S-Corps exam, but
That's okay.
It's not just breach of confidentiality, it's also malpractice maybe, in a way.
Yeah, I mean, whatever you recover, the client may.
Client can get back, yeah.
Maybe, but maybe not. Or Mexico sounds inviting.
But I just imagine the way that the award process would work ill-gotten gains, it's kind of fruit of the poisonous tree, if you think about it.
Alright, and Kevin, you were gonna say something.
There's an act called, and I don't know if I'm saying this right, Sarbanes-Oxley Act, that kind of protects you to a certain extent, but at the same time, there are other rules that try to go against that, because then lawyers would do it for their own personal gain instead of for the right reasons.
You were gonna say something, Brian?
I thought I read that you don't get the reward.
Yeah, where it says,
I mean, yeah, it's
page
confusing.
141 at the,
Indeed, right? That's the confusing part there. And it says, indeed, the FCC warns lawyers that there will be no financial benefits or disclose such information violation of the attorney-client privilege. Or the ethical requirement.
Where are you reading on page 141?
The last sentence is two attorneys who whistleblower the bank.
Yeah, I had that underlined in red.
Yeah,
I read it,
that's
the
where
last
I
sentence on page
confused.
141.
That's where I could get confused. You start reading one thing and then, all right, whistleblower.
Well-
Start reading.
Alright, so everyone agree?
Well, I just think that
Yeah.
in the beginning, like, it makes sense because of Enron and all that, it makes sense, they were fudging the books, you know, they were, frauding, pensions and so forth.
right, employee-employer is one thing,
Right.
but client relationship is a different, I feel like.
Because I believe the Sarbanes-Oxley and the Dodd-Franks were just put in place just to prevent another meltdown, to prevent corporate, fraud and that type of stuff. So it allowed, CEOs or anybody, any company to say, hey, listen, the CFO is doing this or is fudging the balance sheet or what have you. It gave them protection. So I was trying to figure out how, I know they're trying to make comparisons, they're trying to prove them.
So how many by a show of hands think you can get the award? How many think you can't?
It
Does
depends,
it have to do with the original information?
depends on,
Well, it depends on what.
I believe it depends on how grossly you may be.
I don't think accountants should be allowed to do that stuff.
And Omori, you were gonna say, and then I'll chime in?
I think it was, I'm looking at rule 21F, 4B.
Just what page are you looking
141.
at, right?
It says acknowledges the importance of the attorney-client privilege as well as state ethic rules and presumptively excludes the use of privilege or confidential
Just-
information from the
Just say it
definition.
louder, so what's your takeaway?
My takeaway is that you can't, because it's not original information based on rule 21F 4B.
See, I think to all your points, we're torn here, right? Because society would like to know about bad actors, right? So that's why we have whistleblower laws. And on the other hand, we want confidentiality among professionals because we want people to be forthcoming. Because by being forthcoming with your lawyer, the aspiration is that the lawyer could say, hey, here are the remedial measures you could take to correct your bad actions. But if you think your lawyer may turn around the next day or your accountant and divulge your secret, you're not going to say anything and perpetuate the harm. So everyone understand the conflict.
Yeah.
So generally, I'll agree with you. The awards are not permitted. There are some exceptions which we're going to learn in chapter 4. Like the duty of confidentiality is not airtight. For example, if the client tells you they're about to blow up the White House, do you have to keep that in confidence?
That's a future event.
But are you allowed to go to the police?
Yeah,
Yeah, in other words, the duty of confidentiality.
You could be held liable.
Right.
right, but that's not something that was already done. If you're an
Absolutely.
attorney and he said, I blew up the White House.
Right. My point is, there are some, we're going to learn next chapter, that sometimes there are confidences that there are exceptions. Like any rule. There's the general, there's exceptions. So what this opinion goes on to say is that sometimes there's going to be permissible disclosure, right? Because you're not going to be in a situation where you're going to violate the attorney-client privilege or the accountant-client privilege. And in those circumstances where disclosure is permissible, that's rare, right? Everyone agree? Disclosure is rare. But in those rare instances, you might, emphasis on the word might, be able to collect. And then it ends the opinion, towards the end, it says that with respect to non-clients, if you're not representing the person, then all bets are off. You can try to collect on a whistleblower if it's not a client. So this opinion goes on in length. You should read it, but it's sort of portraying a landscape where generally you're not going to collect award because it's too tempting. On the other hand, there are some very narrow circumstances where you might be able to. So if you picked up ambiguity, the ambiguity's in the nature of it could go either way.
I mean,
But
like for example, not to go, if you are a CPA working for another scenario like Enron that's about to come, I think that would call for you to break that client privilege and have with,
why?
Because it could create another financial, I would find
But
that.
that's not a crime, that's a civil, generally civil.
It's not harm.
I mean, that's a tough case, I agree with you.
I thought Sarbanes-Oxley made that criminal.
Yeah, but that's like for like the CEOs, the people that are behind the scenes. I'm thinking if you're like a CPA working in that building and you realize that now you're listening. That's
If you're an employer, I feel like we got a different relationship then.
Well, employer-employee is not a client, so
Right. So
you
you're-
probably can make disclosure in
Right.
that
That's
context.
whereas when you're a client, I feel like it's a different
Different
level.
standard.
Yeah.
You want employees to come forward and
Right.
do this.
But when you have an expectation of confidentiality, like in a client relationship,
Right.
there's different standards.
Different standard. Let's look at problem before time gets away from us. Problem 3-24. Lawyer Lucy regularly assists U.S. persons own offshore financial accounts to regularize the U.S. reporting and tax obligations. Lucy routinely discusses with these clients the substantial penalties they may face for failing to report income on their tax returns or for failing to report the existence of the accounts on IRS Form 8938 and FinCEN Form 114. And it talks about the penalties. Some of these clients decide to participate in IRS's offshore voluntary disclosure program. That's what Bob Stern was talking about, right? Under Lucy's guidance, while others choose to pursue other approaches. Several wealthy clients with whom Lucy has worked suddenly stopped calling Lucy or otherwise indicate they decided not to report their foreign account to the IRS. I think I told you, I had this happen to me where clients came in, they told me about their foreign accounts, and I said, okay, we gotta go through the voluntary disclosure or else I can't represent you anymore. And I was waiting for the call back, and the husband and wife, the husband said, don't worry about it. I put all the accounts in my parents' name. And I said, well, your parents have a big issue. He said, no, if the IRS ever comes, I'll tell them it's my responsibility. I said, this is not where you get to choose who's responsible or not. But, so I thought, like, with that in mind, I was gonna get the call that we were gonna work on a voluntary disclosure. I did get the call the next week, and the guy said, would you mind sending my file FedEx back to me? Gone, all right? But I have to say, that happened like 8 or 9 years ago. I wonder what happened today. Like, he was a lot of bravado at the time, but now I wonder if he paid the penalty or if he's having sleepless nights.
Well, I mean, if it's under his parents, he's probably waiting for them to just kick the bucket and gets the nice step up, moves them in, and reconciles the whole situation.
It's not as easy as that.
Oh, yeah,
And
obviously there's more hoops, but.
hoping your parents die in a window period is not my idea. Can Lucy contact the IRS whistleblower office to report her client's non-compliance? What do you guys say?
Absolutely not, no.
No. That does not cut it. Okay, got some big issues there. Can Lucy contact the IRS whistleblower office to report the names of banks which her clients have held their unreported accounts? then you're saying no.
Ultimately, it's just doing the same thing indirectly.
Yeah.
Yeah, I would say no, because those bank accounts came from clients that was privileged, and that may also indirectly get their client.
Yeah, I
Yeah,
mean,
you're disclosing
they're
privilege.
disclosing privileged information, which is gonna lead the IRS directly to your clients. Query, but probably is worthless, is that suppose all your clients have come forward, okay? And they have, you have 10 clients, all 10 had money at Swiss, credit? Credit
Credit
Suisse,
Suisse,
thank you,
yeah.
my dyslexia. Credit Suisse, okay? And they came forward, and they're clean now, right? Because can you now report Credit Suisse? And you could, but the IRS is gonna say, listen, that's pretty worthless information, right? Because we already knew that. So don't think you're gonna be so smart, like, oh, I'll rib. And some of that may be a conflict of interest because now you're putting your own personal financial interest. Maybe you shouldn't have gone through a voluntary disclosure with your clients. For whatever reason, you just want to try to make a quick buck through a whistleblower. So you can see the tension there, but this is not your big payday, guys, for you personally, unless you learned. I do know, tax professor, he's not embarrassed to, Greg, and I'm drawing a blank, it's at University of Georgia. He is bringing a massive whistleblower action against Yahoo, Google, Facebook. What's his class action suit? He's bringing it against them for offering, most of those firms on their campus offer free lunches, free dinners, free breakfasts. He claims it doesn't qualify under Code Section 119. And
Greg Folta?
What?
Folta? F-O-L-T-A or Folta?
I don't think that's it. I'm drawing a blank on his name. There's a reason I'm probably drawing a blank, but, anyone else?
Sounds like a bad guy though.
Well, he's bringing this action. He's got a big, how do I say, ego, let's put it that way. Anyway, he's bringing this action because he thinks he could, and he may make a real killing because he's arguing that these firms should be reporting this all as taxable income, and they're not.
Isn't that like very clearly for the benefit of the employer though, to keep your employees on your
Is
campus?
it?
To keep
Was
them
he
on the
inspired by
campus,
your
probably
articles video?
working and not having them go 30 minutes away for lunch.
You could argue that in a lot of cases. I understand it if you guys remember from your days of income tax.
What if they just have a mandatory meeting during lunch every day?
But that's hokey. No one has a minute. Right.
But you have a Rutgers video on that. Was that before or after this whistleblowing thing? Was he inspired by your video is what I'm asking?
No, he had this suit, and it's been going on for years. These
Okay.
things do not get quickly resolved.
Okay.
All right, let's do this, guys, because I know several people have to take the S Corporation exam. So give me 4 more minutes, and then I will send people on their way because I know they have an exam this afternoon. So let me talk to you about Chapter 4 for a moment, and then we'll call it a day. We'll finish up Chapter 3. There's not much left here. But Chapter 4 talks about client confidentiality and evidentiary privileges. So let me just highlight 1 or 2 things here because I think it will make your reading for next class much easier. So keep in mind, client confidentiality, most of you know what that's about, right? That you have these conversations with an attorney or accountant that's supposed to be held confidentiality. By way of contrast, look on page 160. The first full paragraph. The other important rule of evidence may prevent disclosure of client-related information in a judicial or other proceeding is the work product doctrine. So wholly different, It is not client confidentiality. Designed to prevent opposing counsel from learning about a lawyer's analysis, theories, and thought processes that are developed in anticipation of litigation. While the work product doctrine, like the attorney-client privilege, may be waived, okay, there's a possibility for waiver, it is only a conditional privilege. If the party seeking disclosure makes sufficient showing of need for the protected evidence, the court may order disclosure. So let me give you the paradigm situation of the work product doctrine. Viva's being sued, okay? for something she's done, and she hired me to do legal work and legal analysis. And Brian is opposing counsel. And Brian would like to learn about the theories that Solid has come up with to protect Viva. And Brian, through discovery, sues and asks to see my records. Okay? It has nothing to do with conversations I have had with Viva, right? That's client confidentiality. But he would like to get aspects of my work product, right? To learn my litigation strategy. Should he have access to my litigation strategy? And the answer is no, right? Why? Not because of client confidentiality, but because of this work product doctrine. Now, the work product doctrine in that context is pretty easy because you guys are emphatically saying he should not get access to Solid's strategy, right? Everyone agree? That seems ridiculous on its face, right? Okay, but let's take it back a step or two. Suppose Viva hired me 3 or 4 years ago because she was considering developing a certain kind of straddle, okay? And she hired me to do some legal analysis 3 or 4 years ago. There's no Brian was not suing me. Brian's client was not suing me, right? Suing not me, but Viva, right? She hired me 3 or 4 years ago. And I did legal work. I prepared a memo 3 or 4 years ago. Should that memo, done 3 or 4 years ago, where there was no litigation, even on the horizon, maybe there was, maybe there wasn't. I mean, Viva didn't just hire me for fun. She hired me because she thought down the road this could get a little tricky with people investing in this. Should that have work product protection?
Just legal
Well, can we
advice, I guess.
subpoena?
I'm giving
Right.
legal advice.
I mean, he can go to the courts and get a subpoena.
Can he subpoena my records or her records?
I don't know, legal advice.
Well, the question is, were these memos prepared in anticipation of litigation? Because if they were, work product protects. If they weren't, then work product may not. I'm going to leave you with that question. We're not going to resolve that today. But I just want to make sure, notice chapter 4, which you should read for next class, is bifurcated into 2 parts. You know how chapter 2 was bifurcated into 2 parts? We had taxpayer penalties, and then we had tax return preparer penalties. Chapter 4, same protocol. We have attorney-client privilege and work product doctrine, okay? So I'll see everyone Wednesday right here at 5 o'clock. Good luck on the exam today.
Thank you.